with Gervy. I hope you've been doing well and staying safe. We're going to continue our weekly topic here. I'm going to continue it based on my last video, which was about where are Canadian interest rates going. And I'm going to take you throughout this video in terms of mortgages, obviously if you're a buyer and seller in Canadian real estate, and obviously talk about inflation because that's the biggest, elephant in the room to say the least. To kick it off here, today, September the 13th, U.S. inflation number came out. It came out at 8.3% year over year, which was a surprise. The expectation was 8.1. What, guys, this pretty much certifies is that the Federal Reserve, most likely in their next decision, with the end of September, will raise their overnight or interest rate by 75 basis points. And then this is obviously going to have effect on the Canada's next decision rate as well. And I'm going to take you through those details. But this was definitely a surprise today. The market fell off huge, to say the least. And it looks like these ramifications are going to continue for a little bit longer. But inflation, guys, is the key part here. You got to continue to look at where inflation is coming and what those expectations are, because that's really what is driving interest rates. And I really want to make that clear in today's video, that is, inflation is strong and obviously coming at high. Interest rates are going to continue to go up, and obviously we'll see where they kind of plateau or where the banks and central banks take a break and say, okay, let's look at the data, how is the economy performing, and go from there. So based on that, really the question becomes, how high should interest rates go and how fast? There's definitely different opinions on, where interest rates should go. Obviously, should they continue higher? Should Bank of Canada take a break? What we kind of learned from the U.S. numbers is that most likely they're going to continue to raise, which is the Bank of Canada. Their next decision is October 26th, and expect minimum 25 basis points. It's going to be somewhere between 25 to 75 basis points from what the market's saying and what my research is saying. So we'll definitely see where those numbers kind of go out and kind of turn out to be. Also, at the same time, what are the big banks saying in terms of the economy? So bank CEOs, this is an article here from the Canadian Press on September the 7th. Bank CEOs say higher rates, starting to dampen growth despite economic buffers. And just a few lines here. The heads of Canada's biggest banks saying rising interest is starting to have their intended effect, which is slowing down demand, which is what ultimately interest rate rises do. This is from RBC Chief Executive Dave McKay, said that while commercial credit remains strong, there are signs that weakness in some areas is starting to build. The bigger impact from these higher rates is it's dislocated some demand in some markets. You're seeing certainly mortgage markets react to higher rates. So we're definitely seeing a cool in housing market, from sales activity to housing prices. And you're seeing slower growth, and that's what it's all about. The bank is also seeing slowing growth in credit card purchases as people become more conservative after they stretch, obviously, in strong growth in that area. And this is going to continue, guys. You're going to continue to see the Bank of Canada to apply pressure to slow down demand. To slow down demand, you're going to continue to raise interest rates with the purpose of taking inflation, obviously, between 2 to 3%, which is the Bank of Canada and the U.S. Federal Reserve's ideal, kind of sweet spot. But it really depends on how long it takes to get there, and obviously what the numbers or what the stickiness is. Right now, rents are really strong in terms of year-over-year appreciation, and definitely food prices. I'm sure you're seeing it at the grocery store. I'm most definitely seeing it as well. So this is the next article here is from September the 7th as well, from the Financial Post. And the question is, are we on our way to 4%, which is the Bank of Canada's overnight rate? And what economists are saying about Bank of Canada's statement. So guys, this is a lot of different opinions from many different economists here. But as I was reading throughout this, the consistent message I got was, Bank of Canada is going to continue to raise interest rates for the rest of 2022. We'll definitely see what that means for 2023. Definitely the consensus is it's going to be a recession, mild or, obviously heavy. Time will only tell. But do, guys, brace for more interest rate increases. The next Bank of Canada decision is on October 26th. So definitely be prepared if you're looking to buy, sell real estate. You're going to get obviously an auto loan, and how that means for your cash flow, because cash flow is obviously key for everything. Continue on that same topic, guys. The last piece here is inflation is just not an issue in Canada or the US. It's obviously throughout the world, given what's happened since the pandemic and the money printing and obviously the liquidity provided in the market. As you can see here, on September the 8th, European Central Bank makes the largest ever interest rate hike, and they hiked it by 75 basis points. And that tells you everything in terms of what is inflation doing across the world. It's causing havoc. Obviously, with the US-Russian conflict, natural gas prices in Europe and the UK are definitely gone through the roof. roof, and that's adding to the additional pressure. But until inflation is not tamed, you're definitely going to see this path of inflation continuing to drive this conversation, and you really got to be looking out for that inflation print in terms of just preparing. Should I get that car loan? When should I go to a variable or fixed interest rates? And again, guys, I hope you appreciate me coming at you on a weekly basis. I am a wealth management advisor. I do this day in, day out, researching, obviously working with my clients. If you have any questions for me, I have my Twitter and Instagram handle obviously in this video below. I always say as well, if you're looking for advice, work with someone you trust, someone that you believe you can build a relationship from there. So guys, 3 key takeaways. Look out for the inflation number. It's the key driver of interest rates. In conjunction with that, we're definitely going to see interest rates continue to rise based on what we saw from the U.S. Inflation print today, and obviously Canada following suit, and obviously what we're hearing from the market. And the third thing, guys, inflation is definitely not only a U.S. or North American issue. This is all across the world, and definitely European Union is facing the same inflation, even higher than Canada and the U.S. So I hope you appreciate it coming at me, guys. Any comments, any questions, please leave them. Any likes, and obviously subscriptions are much appreciated, and I'll continue to provide this information to you on a weekly basis. So guys, have a good one, and talk to you very soon. Thank you for watching.